in any cycle, Europe outpaces our indices 50% of the time. So the argument is, if you're a long-term investor, you want some exposure to the European market. It doesn't have to be 100% of your portfolio. I like 20%, but the truth is it does outperform half the time, and currently PEs are lower in Europe. Earnings growth in the U.S. is 9.7%, it's 11% in Europe. And the political risk that everybody assumed was there just hasn't materialized. Things are quite stable, and they still have all kinds of incentive programs to support equities in government spending right now. So I like Europe a lot. I think it's going to outpace the S&P this year, and I think you should be invested there.
You know, Charlie, what's good for Europe is also good for the S&P because it's so exposed to how well the continent does. So if you're saying that you like the U.S., do you mean exclusively? And if so, do you want only U.S. exposure?
Well, I think people should invest in what they know. It's one of the most important rules of investing, and a lot of Americans overestimate what they know about European stocks. And what we found over the last 20 years is there are lots of landmines there, and you're probably not going to find the Greek banking crisis before it explodes underneath your feet. So first, invest in what you know, unless there are big differences in values. I would have said 4 months ago that Europe was a lot cheaper, lower multiples than the U.S., but the U.S. earnings have been growing faster. The multiples have come down, and so right now, there's not much of a gap. I'd go with the higher quality U.S. earnings.
Before we go, Kevin, you're the ETF guy. Do you buy just a broad European ETF, or where do you concentrate those investments you like there?
I use the FTSE Russell Index, OEUR, which gives me large cap stocks in Switzerland, Germany, France, and England. And you know, names like Nestle and Roche and Anheuser-Busch, those are names that we know very well stateside because we buy their products, and they have a huge advantage. Now they have a lower currency, the wind is behind their backs, and you know, a lot of people thought Nestle was an American company. No, it's Swiss, and yet it has huge market share in the U.S. Europe is here to stay in terms of big names, and I like to buy them through an ETF like OEUR.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.